Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Billionaire investor Mark Lasry is doubling down on debt abroad and on women's sports. But he says opportunities will surprise you.
If somebody said to you, well, all you got to do is stand there and somebody's going to slap you.
Have you invested in it?
No, I haven't.
Okay.
But do you know what the ratings for that are?
Off the charts.
Off the charts.
Bringing aid and maybe some hope to victims of the LA wildfires. Sports gear and memorabilia company Fanatics leading the charge. CEO Michael Rubin.
Anyone of our size who has a platform like we do, you have a real responsibility to use your platform to make a difference.
Plus, where big tech stands in D.C.
Who's not in the MAGA 7? Netflix.
Plus, Meta's Mark Zuckerberg's political evolution. What he told podcaster Joe Rogan about competition, content moderation, and the iPhone.
This is almost a declaration of war.
He's been doing this, though, for the last 5 years, maybe longer.
It's Monday, January 13th, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. The gang's all here. We're ready for the week. Stocks were down on Friday after those hotter-than-expected jobs numbers dampened expectations for more interest rates cuts coming from the Fed this year. For the year so far, the Dow is down by 1.4%. It's now down about 4.5% from its all-time high. The Dow is even down more than that. The S&P is down 4.5%. The Dow is down. It was something that caught my attention this morning. It's off of the all-time high. It's 7% for the Dow off of the all-time high. S&P is down 4.5% from the all-time high. And if you're looking at the NASDAQ, it's down by 0.75% for the year. From the all-time high, it's off by same thing, by close to 5%, a little over 5% if you're looking at the NASDAQ 100. Treasury yields have picked up pretty significantly. The 10-year is now yielding 4.78. The 30-year closed just below 5% on Friday, and you can see it sitting right at 4.95 right now. And then you have the 2-year, which is all the way up at 4.42. Again, questions about whether the Fed's going to cut at all after the numbers that we saw on Friday. Bitcoin is down about 9% from
92. That's supposedly support. Oil, it's like pushing 80 again. That's always helpful.
for the inflation picture.
Remember when we said that it's just that this started so slowly with little single-digit sell-offs.
You were saying it from the beginning that you felt very uncomfortable with
the way it starts.
High.
Like really quick, big breaks, usually that's like a bull market. But when it starts slow, you kind of write it off. And what's it add up to now, 7%?
7% for the Dow. It's 4.5%.
Still not that much,
for the
but
S&P 500. But if you're talking about a 5%
But
pullback,
we haven't noted. It hasn't been something that just shakes your fear. And that's the bad kind. When it really shakes your fear, it just usually comes right back up.
The Russell 2000, it's more than 11% now from an all-time high. So you're talking about a correction territory for some of these major averages. And I think transportation's had a really rough day on Friday, too, the transports. I think this is the market having to realize that it can't have its cake and eat it, too. If you're going to be talking about rate cuts.
I don't even think it was.
Strong economy. It was a strong economy, and it sold off on that.
But I think we've given up on rate cuts already, maybe one or two. But now we're back, and that was what I was saying to Leisman Pollyanna. I was telling him people are worried about inflation again. And that's why the bonds are acting like that. A strong jobs number, I said that'd be the worst thing on Friday. And then it did, and it was. And Steve said, no, it's not a bad thing beforehand. And then it happened, and he says it's still not a bad thing. And then even after it happened, he said it's the...
Did you read the Wall Street Journal piece on bonds? I saw it yesterday, so I don't know if it's in today's paper.
It was
but
a
I read
weekend
it
Wall Street Journal?
I read it yesterday online.
Oh, that's right, it's online.
And it's such a weird, it was a kind of convoluted story trying to explain why bond yields going up may not necessarily be a bad thing and maybe buy into it, but it was kind of convoluted.
It cannot be a bad thing if your fear is a weakening economy. That's no one's fear right now.
But if it's an inflation story, then it's a much different picture.
Don't we get inflation numbers this week? Don't we get a couple of them? I think we do.
CPI and PPI?
I think we get something. I remember that. You know what? Within a couple of weeks, we're going to get something.
Yeah, that is true.
We can always count on that.
Meta's CEO Mark Zuckerberg slamming rival tech giant Apple on Friday. Here's what he said Friday on an episode of the Joe Rogan Experience.
They have used that platform to put in place a lot of rules that I think feel arbitrary and feel like, they haven't really invented anything great in a while. And it's like Steve Jobs invented the iPhone, and now they're just kind of sitting on it 20 years later.
Zuckerberg said Apple makes money by basically squeezing people and having a 30% tax on developers. Before we play some of these things, we should talk a little bit more about what this means. I mean, this is almost a declaration of war. You rarely see a big company making comments to try and draw in regulatory oversight, but that's certainly what this seemed like. I don't know if you guys heard more of it.
He's been doing this, though, for the last 5 years, maybe longer. I think a lot of,
explicit.
He's been saying it relatively explicitly. I think his argument has been both the 30% piece is something that's frustrated him immensely on a whole level of a whole number of levels, because there have been businesses that they've tried to build on top of the Meta business.
Like the Meta glasses. He was one of the things he said on Joe Rogan.
The Meta glasses is a separate issue, where the 30% piece is about charging people, and he's tried to build businesses on top of Meta, but then you'd have to be paying the 30% to Apple before you'd be able to build the additional business.
We cut off the quote that he was saying on this, but he was saying, like, the big part of it is they're great for building the ecosystem, but we basically don't want to pay to use they don't want to pay
to use the ecosystem.
Right.
And then the second part is the Meta glasses, which is that, my earbuds, where are my earbuds? They connect to the iPhone better than just about any other device that's made by a third party.
He said exactly that on Joe Rogan.
And he's been very frustrated. I have the Meta glasses. I like the Meta glasses.
I have them too, and I like them.
And it is a little bit more complicated to connect those glasses. And it's a little more complicated to connect basically anything to an iPhone relative to relative to an Apple device, because they are using a different protocol. Now, one of the points he makes about that, which is so interesting, is he says that they're arguing, well, it's a security thing.
Yes, this is what he said explicitly.
They're saying build the security into the service. I'm sure there's elements to that which he's right about, and I'm sure there's elements on the other side.
But he was pretty explicit where he said that this is just an excuse that Apple is using privacy and protections. He thinks it's a big scam, and that's basically what he said on Joe Rogan, that they are just using that as an excuse for any of these things. It's just, usually you don't see the big tech companies very publicly saying to the regulators, here's where you should go after them. It's usually more of a system of whispers, of quiet behind the scenes, or getting other people to be your proxy to go do it. He came out and said it pretty explicitly. And they're frenemies, right? They work together on projects and not on other things.
But I think that this is less of a frenemy. This is more of an enemy thing for a long time now. Of the relationships, this has probably been the most complicated anybody. I think people who are following this know this has been the most complicated.
Who's closer to the Trump administration? Zuckerberg, who's trying to make some changes and make some inroads with it, or Tim Cook, who was he's been there since the last administration?
I was going to say, I think Tim Cook is. Yeah. I think even Google might be, oddly enough.
Yeah.
But we'll see.
Google's close?
I think that privately, Sundar has had a oddly interesting relationship with Trump.
Oh, I'm adding him to the MAGA 7 then, as a solid member of the MAGA 7. Who's not in the MAGA 7? Netflix.
Netflix is not, but Netflix isn't really.
Yeah. Zuckerberg also described the company's relationship with the Biden administration. He said officials berated Facebook staff during requests to remove certain content.
Basically, these people from the Biden administration would call up our team and scream at them and curse, and it's like these documents it's all kind of out there.
Did you record any of those phone calls?
I don't think we but I think
I want to listen.
There are emails.
He said the White House asked Facebook to remove a meme that showed actor Leo DiCaprio pointing at a TV screen advertising a class action lawsuit for people who took the COVID vaccine. Zuckerberg said that they responded that they were not going to take down humor and satire. Zuckerberg made those comments days after he announced that Meta would end its fact-checking program and replace it with a community-driven structure that's similar to the one on X.
Meantime, Meta Platforms terminating major DEI programs. Those include relating to hiring and choosing and training suppliers. Meta said it is changing its course because of what they're saying is the changing legal and policy landscape surrounding DEI efforts in the United States. As a result, Meta cutting its DEI team, replacing equity and inclusion programs with programs that mitigate bias for all, no matter your background. It's also ending representation goals that it had created that they say set the impression that some of the decisions being made were based on gender or race. Separately, Amazon halting some of its DEI programs as well. Spokesperson declined to detail the exact changes, but said it would continue to operate organizations formed to hear worker concerns and advocate for specific groups, including women, black workers, and military veterans. And, you know, Robbie Starbuck. Power and influence of Robbie Starbuck.
It's just.
But
he's just a messenger.
He's the messenger.
It's collapsing under its own weight.
But I think a lot of these companies have either heard from Robbie Starbuck.
Sure.
Think they're about to hear from Robbie Starbuck.
But if the problem wasn't there, it wouldn't matter whether Robbie Starbuck, some guy with a man bun, can't just come along and change all of corporate America if it's not ready. It was dying under its own weight, collapsing under its own weight. It's fundamentally probably not a great way to do things if it's not based on merit. We should have learned that by now. We all want to get to a certain place, but you got to, if you do it wrong, it's going to collapse.
Cheese will be next.
Coming up on Squawk Pod, a billionaire's pitch for sports investing. Why Mark Lasry bought and sold the Milwaukee Bucks, a pickleball team, and is now doubling down on women's leagues. Plus, where he's finding other opportunities.
Europe, because of what's going on in the Ukraine, because of slow growth, there we're seeing a lot of opportunity. We're seeing that we can lend money and we can overcharge for that.
This is Squawk Pod.
Up and Andrew, Q.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Joe Kernen and Becky Quick.
All right, let's welcome a special guest who is here to talk sports investments, the markets, and much more. Avenue Capital's chairman and CEO, Mark Lasry. And Mark, we have so much to talk about with you this morning, but I thought we'd start with sports just because you are somebody who looks at sports a little differently than most big investors do. A lot of times people get into it because they're fanboys. They buy a team they love. They hold on to it for forever through thick and thin. And you're a little different. You're not so sentimentally involved. You bought the Bucks, sold it at an incredible profit, got into pickleball, sold out of that at a big profit too. You look at sports as an actual business, and you think people don't understand it. What do you see that others maybe miss?
Look, I think part of it, what people miss is all sports ultimately is how many people are watching it, right? So simple question, like if you think of hockey, 500,000 people watch it. Baseball, 1 million. Basketball is 1.5 million. All right, bull riding. How many people do you think watch that?
200 million?
No.
200,000.
200,000, I hope.
Oh, 200,000, yeah. Sorry.
It's 1.2 million.
1.2 million? Okay,
it's
so
more
that's a
than
much
baseball.
bigger audience.
Really?
Yeah.
Wow, that shocks me.
I know. Sailing, which 3 years ago didn't exist. There's a sailing league. Today, you've got 1.8 million. You got more people watching sailing than you did basketball. So to me, part of it is you've got all these sports that people are watching, so you want to sort of get into it and invest in those before they become, I would say, sort of in the national conscience.
So you think baseball's overvalued for the number of people watching, or do you think bull riding's massively undervalued?
I think it's just undervalued. Yeah. I think what we're trying to do is find sports that are undervalued and invest in those so that 5 years from now, as they get their new media deals, that's when you'll capture the upside.
And you've been able to do that by doing what? What are the actions? I know you're involved in women's sports right now. You're buying a lot of women's soccer teams or making bids for them. Where do you see as the most undervalued places that have the most upside potential?
I think it's women's sports. It really is. And the simple reason for that is just as people, like, I don't know, do you have little girls?
Yeah, I do.
Right. So if I would say for Joe and I, our parents, I have sisters, my dad never brought my sisters and I to a game. It was just my dad and I.
Right.
The idea that you're not...
my daughter, yes.
Like, it's inconceivable to you that you would not bring your daughter. And that's what you're having. You're having this change. as more and more people are bringing their daughters, and more girls want to watch other women play sports. So you're seeing women's soccer, you're seeing women's volleyball, women's basketball. Those are just growing in popularity.
Do you think that women's sports will only succeed, though, if more women are watching those sports? So it's a generational issue, or do you think you're going to ultimately, for it to work, you need men to be watching these sports in significant numbers? I ask because I think if you look at football, it's actually like 60-40 or maybe 70-30 in terms of men to women, but there's still a significant...
Yep. You need to have men watching it. And I think this generation, if you went when the New York Liberty ended up winning the WNBA title, if you went to that, you would have been shocked how many men were there. Yeah. And that's what you're seeing. You need to have men and women watching, but I would say today's generation doesn't care, right? The younger you are, you're going to go to a women's game, you're going to go to a men's game. Right.
You know, one of the reasons I really wanted to talk to you, Mark, was what we're watching in college sports right now. The name, image, and likeness money has changed the game entirely. We're talking about things that it's hard to say that these are still going to be student athletes. Focus on the athlete part, not so much on the student part. Yep. And I think you see an opportunity here, and I'm trying to figure out what I think of that opportunity. You've said that you'd be looking at some of these college teams, that the colleges are going to sell them, or at least majority stakes in them. That is hard enough for me to get my head around. How does it work? Why does it work? And how is it going to change things?
They don't have a choice. You know, and the simple reason they don't is kids are getting paid. So whereas for me growing up, the dream was to go play at Duke or go play at Kentucky or UCLA. Today, if you're a kid, if you're getting paid money from University of Louisville, and that's more that you're getting from Duke, you're going to go there. And so the cost of that is going up. And the problem for universities is you need that money to attract those students. And the only way you're going to get that money is either alumni are going to give you more. But the problem with that is it's no longer a tax deduction. So if you, I don't know where you went, but if you...
Rutgers.
Okay, so Rutgers, for Rutgers to get people to go, you've got to donate. But if you donate to the university, it's 100% tax deduction. If you donate to the athletic department, it's not. So therefore, you're going to find it's going to get more and more expensive. And what you're going to end up doing is selling these businesses, not 100%, but you'll sell 50% of that so that you can keep attracting students. And as you attract students, it's great for the institution.
But if you see an opportunity there, it's because you think more can be done, more profit can be generated from this. Isn't the university giving up on that profit if they're selling out on it early at a lower amount?
100%. No, universities understand that. But universities need the capital because through the capital, more people are going to come to the games. And as more people come to the games, more people go to the university. So they understand that, and it's either alumni are going to give you that money, or it's going to be people like us.
But you think it's an important flywheel that they don't have more students who are attracted to the university if they don't build these big programs?
They don't have a choice. And it's sad because I think college sports is getting dominated by, Ohio, Michigan, all of those. And you're going to have, like for Rutgers, it's going to be hard.
Yeah.
So Rutgers needs to attract more students who are going to come. And the way they're going to do that is those students are going to get paid.
And the opportunity for you and the places that you're doing this, can you talk about any of the places that you're actually working on a bid right now?
Yeah, I mean, we're talking to a number of universities. And for us, if you say a university is making $100 million from that, we'll buy half of it, and we'll end up paying like around 12 times. So university is going to get about $600 million. And that helps them over the next 5 years to 10 years to compete and to build and grow.
How much do you think of all of this as a venture capital style approach versus a private equity style approach?
I think it's very much private equity.
You don't think that there is going to be a bunch of home runs in here and a bunch of bankruptcies when this is all over?
No, because you're investing in programs that exist.
On the college sports side.
Yes,
I'm just saying, I'm saying Broadly speaking, you got the college piece here, you got women's sports, you got
talking sailing,
you got
pickleball,
sailing,
whatever,
you got all sorts of things in here. And I'm just sort of wondering, do you say to yourself, you know what, I may strike out a whole bunch of times here, but I think that there's so many, not so many, but even a couple of massive winners in here that it's all going to sort of make it, come out on the wash in a good way?
No, I think it's very much private equity. And the reason for that is I have the cheat code. Like, how would you like when you were in high school and you already knew the answers to the test? You'd love that, right?
You think you got the answers?
Well, I do, and I'll tell you why. It's actually really simple. After it ends up being on TV, we now know what the ratings are. So why did I invest in bull riding? Because I saw that ratings every year for 3 years went up. I'm not investing in things where ratings are going down and people aren't watching. I'm only doing it after I see that people are doing it. So the fact that you've got the ratings every day after something plays, that's what you've had in women's sports. Women's sports ratings have grown astronomical. So I'm not really taking any chances. That's the difference. Like, I'll give you an example, and I got in trouble for it. There's a new league, the slapping league.
Yep, I know the league.
Okay.
Yeah, and for a hot minute, David Zaslav, I think, was broadcasting some of it. I don't think he is right now.
Right, but that league started out of nowhere. And if somebody said to you, well, all you got to do is stand there and somebody's going to slap you.
Right.
Right.
Have you invested in it?
No, I haven't.
Okay.
But do you know what the ratings for that are?
Off the charts.
Off the charts.
Yes.
And that's my
It's
point.
mesmerizing, I know, but it shouldn't be. Yes.
But we know the answer.
Right.
Right, and that's why it's not venture. The fact that the power slap has taken the United States by storm is phenomenal, but you and I would have said that makes no sense, yet Americans are watching.
No, it makes a lot of sense. It's just then the question of what do you do about
whether
that?
you should allow it to continue. Mark, let's talk to you about the broader markets. You are somebody who's always looked for distressed debt or distressed deals and found really great opportunities. Are you seeing any of those opportunities right now? Are you holding dry powder, hoping for some opportunities to step up?
You have more opportunities outside the U.S.
Yeah.
In the U.S. today, there's a lot of liquidity. I would say everybody is positive of what's happening and thinks that over the course of next year, you're going to have a market that's going to be going up. Europe, because of what's going on in the Ukraine, because of slow growth, there we're seeing a lot of opportunity. We're seeing that we can lend money and we can overcharge for that. Here in the United States, it's just much harder for that.
That was going to be my question. How much are you playing around with the sports stuff, and how much are you still doing this? This is what you do. And I was going to ask how's Liechtenstein looking for their crappy distressed debt? Pretty good? If you, or take your pick. That's what you do, isn't it?
And that's continuing.
How much of your business is still that, and how much is this other stuff I think you're kind of dabbling in this other. Did you buy the PBR stuff? Are you dealing with Ari?
Yes, I am. I am dealing with Ari.
You are? I should be getting a cut of all of these things. I get nothing. I pay him. Why? I don't understand. So yeah, because he's PBR, right?
He's PBR. So 90% of what we do is our core business, which is lending and
90%.
investing. Yeah, and 10% is on the sports side.
That's what I
The sports side is just far more interesting.
It's high profile. Right. You have big investors like a Steph Curry.
Yes.
And without Wes,
Lindsey Vonn.
Without Wes, you wouldn't be doing any of this, I don't think. Wes Edens.
Yeah, well, we're not partners anymore.
I know, but he talked you into that. I just know the story that it was going to be too much. And
yes, he did. He talked to me.
He slapped you, and he said, "Stop whining and get in here."
Yes.
And next thing you know, you've got 10 times your money or something.
It was about 10 times my money.
So where in Europe? Where
said nothing
are there
to me
opportunities?
about it,
I'm sorry?
Where in Europe are the opportunities right now?
It's all Northern Europe right now. You don't want to be in Southern Europe because the legal system's worse. But for us, it's Northern Europe. We're investing quite a bit in the UK. We're investing quite a bit in Ireland. We're just seeing that you can lend capital. We're lending money, I would say, at LIBOR +8, LIBOR +10.
Before we let you go, Celtics are up for sale.
Yes.
Would you buy the Celtics at a $6 billion price tag if that's where it ultimately lands?
I think to buy low.
I think that's high.
Yeah.
The main reason it's high
Where do you think it ends then? You think it's not going to go for 6, 5.5?
No, I don't. It should be somewhere around over 5. The problem is you don't own the arena.
Okay.
Right. And I think if they own the arena, then you would see them trading above 6. But since they don't, you're just buying the team.
Okay. As a longtime Knicks fan, do you think that the Dolans, Charles Dolan, will now Chuck will sell? Now that
I don't think he'll ever sell.
His father passed away. There's always been a lot of speculation about whether the Knicks would go up for sale.
I think he loves owning the team. I think the team is doing well. They beat the Bucks yesterday.
How much do you think the Knicks are worth?
You know, I think the Knicks are worth a minimum of 7 to 8, and all you would need is another person to show up, and you could get involved in a bidding war. But the Knicks could go for a hefty premium, just like the Lakers could.
Right.
Mainly because in those two cities, you've got a number of people who'd want to own that. You would want to own it.
Totally.
So put together a syndicate. I'm with you.
Okay, I'll call you.
Mark, let's go back to what we're watching with interest rates here in the United States and how that plays in. We're watching interest rates pick up, and you can have a lot of different reasons for why people would say that. The 10 years at 4.77 today. You think it's inflation? Do you think it's how much the government is spending and investors taking more note of that, saying you're going to have to pay me more to do this? Do you think it's a sign of troubling times to come? Do you think it will present more opportunities for you from a distressed debt perspective down the road?
I think it's very much that the bond markets look at it and say there's going to be more and more money that's going to be borrowed. And you and I both know as you're borrowing more money, that's just not good. Like in times of positive growth, you should be paying down debt. You shouldn't be borrowing more money. And then if you end up reducing taxes, that's just going to increase the deficit. So I think it's good news for equities because there's going to be more money available, but it's bad news for bonds and it's bad news for interest rates because the cost of capital is going to keep on getting more expensive. As that cost keeps going up, for companies, they're going to pay more, and that's going to be beneficial for people like me.
Because you can then offer to pay them money, to let them borrow money.
Right, and I can lend at higher rates.
Are you, we haven't got much time left, are you glad you sold Sea Island?
No.
Because it's worth 10 times as much as you probably sold it for, right?
Well, it's worth more, but it was a unique asset.
It's still a unique asset.
Yeah, and...
Is there a better place, do you think?
No, I think I think one of the things I've learned is try not to sell unique assets.
I'm just throwing them. I hear from Stylen when I message the mayor. Yeah. He thinks he's the mayor of Seattle. It's the greatest place in the world.
It is
it not? I don't think anything's.
It's gorgeous.
Are you glad you sold the Bucks?
And Frederica.
I'm sad I sold the Bucks. I loved owning it. I think it was fun. I think it's a great club to be in. It was just a big chunk of my net worth.
Yeah.
So what more did you need to accomplish there? I mean, you can't. How many nets?
Right. Once you win a championship,
how many nets you need to cut down? Right. How many boats can you water ski behind, Gordon?
You can water ski behind a lot of boats.
That's right.
Mark, I want to thank you very much for joining us.
Thank you.
We always love talking to you, and we hope you come back.
How many yachts?
Thank you.
How many yachts, not boats? I misquoted the great GG.
Next on Squawk Pod, the massive financial impact of the California fires is just beginning to be understood. Our Contessa Brewer is in Pacific Palisades.
The economic impact estimates of $135 billion to $150 billion, insured losses of more than $22 billion.
The emotional impact is harder to measure. Fanatics CEO Michael Rubin joins us on the quickly developing work of Los Angeles' pro sports teams to bring a little relief to wildfire victims.
You've been through such a tragedy now. If you've lost your house, what can we try to do to show you that there's hope and get on the other side of this? Sports brings communities together.
You're listening to Squawk Pod from CNBC. Here's Joe Kernen.
Developing story in the California wildfires. Governor Gavin Newsom says this could be the costliest natural disaster in U.S. History. Contessa Brewer joins us now from the Pacific Palisades area. Hey, Contessa.
Hey, good morning, Joe. Yeah, wildfires are still burning and strong wind forecast for this week. Neighborhoods, I watched them. They're decimated. Lives, livelihoods, homes, schools, businesses lost. And yet, of course, the work of recovery already begins. Gavin Newsom's emergency declaration this weekend clears the way now for rebuilding. He's ordered state agencies to streamline the permitting process. The economic impact estimates of $135 billion to $150 billion being forecast by AccuWeather. Insured losses of more than $22 billion. That's according to Aon. That's a new estimate over the weekend. These are very early, though. And largely, this is a residential story as opposed to a commercial property insurance story, although it's not insignificant for commercial either. In Pacific Palisades, where I am, insurance coverage from the FAIR Plan, California's last resort insurer, plays a predominant role. Claim payouts are capped here at $3 million. So, of course, that leaves many homeowners underinsured. A highly placed insurance executive tells me that's likely a theme even where homeowners had coverage through brand name insurers, because materials inflation, construction materials up 37.3% over the last 5 years, construction labor up 35%. Far higher than regular inflation. Homeowners may not have kept pace with their coverage, meaning they may have coverage for, say, a $2 million replacement value, where now it maybe would cost closer to $3 million. Also, I'm told where homeowners have paid off their mortgages or never had one, they may have opted out of the insurance coverage altogether, given how high the price of insurance is. And when it comes time to rebuild, already brokers are warning me developers of multi-unit properties may opt to take the insurance payout, just sell the land and run, because of the prohibitive cost of insurance. It just makes developing land unprofitable. President Biden has, of course, promised 100% federal assistance to cover all of California's fire management and debris removal costs for 180 days. That's up from the typical 75%. This is a multi-property unit here, 16 units with amazing views of the Pacific Ocean, completely gone at this point. And this creates all of it, a short-term housing crunch, maybe a crisis. A top executive told me the insurance company he works for is already securing rentals of houses for their clients. And two, part of the big cost of this is that this is now a toxic waste site because of the flame retardant and the fire itself. So that adds to the cost of demolition at this point, something that we'll have to keep our eye on, guys.
It's very concerning because the winds are kicking up again, Contessa. And I'm just wondering whether this could be replicated. You know who ran against Karen Bass? Rick Caruso, who had previously been the commissioner for the LA Department of Water and Power. He's a billionaire developer, and he employed private firefighters and water storage tanks and saved one of his properties, a Pacific Palisades Mall. Everything around him is gone, and he was able to save that. I wonder if that could be replicated, or whether, this is ahead of us now. Monday, Tuesday, Wednesday, the winds could kick up again, the gusts of 50 or 70 miles per hour. He's been very critical, by the way, of Karen Bass and government officials for, fire preparedness, insufficient water storage, everything in terms of forest, what should have been done with forest management. But
management, right. Now
that they're ready, or could they be ready to do something like this to save as much as possible from what could be another onslaught?
It's already happening, Joe. While the fires were burning even last week, there were neighborhoods that were banding together to say, hey, should we hire our own folks to go out and spray fire retardant? And then other neighbors said, yeah, but do we want to have this toxic chemical in our lawns and on our homes if it's not going to burn? So that's already happening. The second thing is, take Chubb, for instance, which sells insurance in the excess and surplus line. So this is outside of the regulated insurance market. They can charge what they think the risk costs and do, and it's not subject to approval by the state insurance commissioner. Chubb actually contracts with these private companies that go out and they'll, tape up your vents and spray down your foam on your roof. That's part of this high-end service that you get when you contract with Chubb. So it's not just Rick Caruso. A lot of people would have gotten this through their insurance company, and it helps protect your house. The other thing that's going to be in focus in rebuilding is I had just done a story on New Year's Eve about the mitigation available with building materials and the way that when you build a house to withstand fire, it can withstand a lot more. A blowing ember doesn't necessarily ignite that house then. And so there will be a lot of focus, even if they streamline it, can you build back better and more resistant?
Right, like Pepperdine, I know
but
a lot
it's expensive.
of the moat but just water storage tanks. I'm not even talking about the flame retardant stuff, but just water. I mean, they didn't have water
People
with
have done
the Palisades
this with their pools.
reservoir.
If you had a pump and a sprinkler system in your pool, you could have
could've
done it. And I've seen videos where people said
the idea that there
saved
was,
their homes.
that the Palisades reservoir was empty. Contessa, thank you. Fanatics and 17 Los Angeles sports teams, there's our 17 teams have partnered to sell LA Strong T-shirts, the proceeds of which will support the Red Cross and the LA Fire Department Foundation. Joining us now with more on this effort, Michael Rubin, CEO of Fanatics, and commend you once again for what you're doing here, Michael. It's not over, and I'm wondering anything we can do now in anticipation of the winds kicking up again this week?
No, look, we're just getting started. I mean, I think we feel like anyone of our size and kind of who has a platform like we do, you have a real responsibility to use your platform to make a difference. And I think we demonstrated that during COVID when we did the big All-In Challenge. I think it was one of the biggest digital fundraisers ever. We had raised $60 million. We made masks for the first time before anyone was thinking about it, cutting up baseball fabrics and uniforms and turning them into masks. And I think the great thing is to watch everyone coming together. We actually, last week, started saying, okay, what can we do? And then I got a phone call from Lon Rosen from the LA Dodgers, said, hey, most of the LA teams just got together and said, we've got to do things. What can we do? Hey, could you get Fanatics to make a collection of apparel? Could they donate all of the profits? Could you get the leagues and teams to donate all of the profits? That was like the easiest yes. I got the phone call at 4 o'clock on Thursday. And by that night, the whole thing was organized and our entire organization rallied together and we launched it the next day. But we don't say, okay, we're done. Now, by the way, it's going to be a big program. There's already, I think, 30,000 individuals have bought, around the world, have bought LA Strong merchandise, which shows people, not just in Los Angeles, but people in New York, people in
And
Europe.
you've already spun this stuff up. I mean, we got it right here already.
It got delivered to me when I got here this morning. Yeah,
why'd you pick the Trojans?
Well, my daughter goes to USC, so we got to support we got to support USC.
You got Bruins?
We've got everyone. I mean, if you're an LA sports team, whether you came up front or you saw this launch and you got into it, it's really about everyone coming together. But the amazing thing is we're not like, okay, we're done. That's us just getting started. Later this week, and our teams didn't want me to say this, but I'll announce it here. We're working to give away about $3 million of merchandise later this week, early next week in Los Angeles to people that have lost their houses. We're actually looking for things that would be very emotional to them. LA's had a lot of championships in the last 5 years. Dodgers won the World Series twice. The Rams have won the Super Bowl.
Yeah, thanks for that.
Lakers, LAFC, and the Galaxy have both won the Cup. So we're looking for all that championship merchandise because if your house burnt down, that may be something that was very emotional. Hey, I had the championship shirt from when we won. So we're going to get $3 million of merchandise together and just give it away later this week. One of the things that's been heartbreaking but really interesting is the amount of individuals who have reached out to our company, who've reached out to me and said, my house burnt down, but the only thing that really matters is this piece of memorabilia that I lost. Somebody called me, actually an investor of mine called me on Tuesday, it's the first person, and said, my sister's house burnt down. It was a very expensive house. We don't care about the house. She had a couple things from Kobe, and that was her most important prized possessions. Can you get me something to help replace that? We right away found those things. So, we've seen so many individual stories where I think based on the relationships we have with players, with the teams, we can create truly a dreamy experience for individuals one by one that can't change the horrible situation of them losing their house, but maybe can bring some happiness to them. And I think it really is our responsibility to do everything we can. And so it's great that we launched LA Strong with 17 teams. It's great that over 30,000 people have participated around the world. It's great that we're going to give away $3 million of product later this week. But we're just getting started. We're going to do everything we can. And the real heroes here, it's not us. The heroes here are the firefighters, all these people coming together. I mean, I look what they're going through. It's insane. And we have so many employees that are affected by this as well.
I mean, the rebuild is going to take so long and be so demanding of time and resources. I guess you're just getting started, but those are funds that can really go towards the rebuilding, too.
Yeah, and I think our desire here would be to be one of the people who created the most funds for this and did the most in the city. This is one that, look, there are disasters that happen often within a year, but the ones that are really big and hit hard, and this is very personal. So we have 1,000 employees in Los Angeles. In LA. Yeah, we have multiple employees that have lost their homes. And I have so many friends that are, have lost their homes on top of our employees that have lost their homes. So it just feels like your family has been so affected here.
Let me ask you, you have a home out there as well.
I do.
It's okay?
Yeah.
Is your sense, beyond the human toll, which is obviously the thing we're all focused on, what do you think the economic impact on LA is going to be? Obviously, the Olympics are coming up, by the way, in 28. There's debates about whether the city's going to be able to actually rebuild by then. There's World Cup, there's Super Bowl. there's a lot of sports, not just in the city already, but coming to the city. And here we have this tragedy in front of us.
Yeah, look, I think I don't know the exact numbers, but I think this tragedy is of epic proportion. I saw an estimate 3 or 4 days ago that said there had already been $50 billion in damage, and that was like 3 or 4 days ago. I think the market's going to have to go through a lot of correction. I mean, look, LA is one of the most amazing cities in the world. I love this city. I spend a lot of time there because it's one of the hubs of the sports and entertainment worlds. But if you think about today, it's very hard to get insurance, right? I don't have my house. I have an expensive house. I have no wildfire insurance because you can't get wildfire insurance in Los Angeles. Now, I don't worry about to me, people ask me all the time, is your house okay? I'm like, I'm not worried about my house. I'm worried about all the other people that have lost their houses. You see people that owned a house for 30, 40 years, and now, they can't afford to rebuild it. They didn't have wildfire insurance.
How do you fix that problem? I mean,
Well, I think government needs to act more like a business in this situation. And look, this is complicated. There's you guys know I don't get involved in politics, but I think here you need to go and say, okay, we have a real problem. You're going to have, many tens of billions, maybe even could it reach $100 billion in damage or plus. You've got all these people that have lost their houses. How do we help them to rebuild the houses on a cost-effective basis? What happens if they didn't have insurance? How do we not have people take advantage of them? So I think there's going to be a lot of entrepreneurial business leadership that's needed. And I think you need anyone that can make a big difference. That's your responsibility. You run a big company. You can help in a big way. You're an insurance company. I know this is a really difficult situation for you because LA is a bad market to insure, but how can you help make a difference? That's why for us, we keep saying, what are all the things we can do? And I can tell you from this show, I'll see reach outs and we'll get a good idea of someone, hey, we didn't think about that. We should do that. So I would say the biggest thing that a lot of people that watch this show can do, these are some of the most powerful people in the world. You have a big platform. Use that platform to make a difference. That's why we want to do so many different things. So when I see you guys in a month or two, because I know you guys want to talk about Fanatics later, we'll talk about here are all the things we did in LA to make that difference.
Insurance, what are you suggesting insurance companies should do? Because they've left.
Well, if it's not subsidized, you got to let them charge what they need to charge, and it's going to be expensive.
And by the way, if you can't get insurance, I'm not sure that you can get a mortgage going forward.
Right.
And so I think the market's going to have to go through a reset to be more logical. You can't force an insurance company to lose money. That doesn't work. Okay.
Right.
The most obvious thing that any business person would say, it's what any of us would say is, hey, if we were running this, wildfires are not a one-time thing in the Los Angeles area. Right. If they're not a one-time thing, how do you now get prepared to make sure that the next time this happens, that the ability to deal with this is so much more effective?
But that sounds like things the government needs to do, not just
And I think the government needs to be more entrepreneurial. Because look, I don't get into politics. I like a lot of these guys personally. Politics is not my thing. If this were me, I'd be in a war room with the smartest people could say, okay, this keeps happening. It's going to keep happening. How do we prepare ourselves differently so the next time it happens?
Don't shoot. This was just abysmal. They shot themselves in the foot. The preparedness was just...
Certainly they weren't prepared for what a lot of people said was obvious, and to me,
exactly.
The biggest way I think you fix this long term isn't about how you force insurance companies or banks or what to do. I think it's to eliminate the problem going forward. And I think the cost of eliminating the problem going forward is probably measured in hundreds of millions, not billions. It's if you want to be prepared for this, like you see all these things on social media. about ideas people have. There's a lot of good ideas. So I think we need to be entrepreneurial to solve the problem
So
going
if people
forward.
want to buy some T-shirts, what do they do? They go to...
They go to any of their team stores, to the LA Dodgers store.
Can you do anything with,
They go to fanatics.com.
Can you do anything with the gambling sites to raise money?
We keep
You're
gambling.
thinking of everything.
I love that everything with you always comes back to
that's the first thing you said to me is, am I using the fanatic?
Yeah, and you told me no. And the one thing that's clear is I'm not coming back on the show until you are fully committed to Fanatics Sports.
I will look at it.
Today is about making... Today's about all the things we can do for.
But you've got a lot of different
companies
companies and a lot of different ways to do this.
Yeah.
But
And great, for us, the thing that I will tell you, one of the biggest ways to get your team, we have 22,000 employees excited. When you say, hey, there's a real drill to do things really quickly for something like this, people love to make an impact. When I was calling and making people crazy during the All-In Challenge, when we raised $60 million that we got directly to food insecurity, our team, they were so proud, and I think people are excited about this. They're excited about the apparel giveaway later this week. They're excited about finding individual stories where they can change someone's life. So, we just saw a story about I don't want to ruin it because we haven't done it yet, but a kid who the best prize thing they had in their house was a ball from one of their favorite players, and maybe we can get that player and get them to go show up at that person's house, and so you've been through such a tragedy now. If you've lost your house, what can we try to do to show you that there's hope and get on the other side of this? And that's what. And look, sports brings communities together, and we sit in the middle of that, and that is our responsibility. And this is one of the. You watch the tragedy; and it's heartbreaking. One of the funniest things is if we can really help make a difference.
Thank you for
coming in. Thank you for
short
doing
notice,
this.
getting you on. Good to have you on. Thanks.
Absolutely.
Thanks for coming in, Michael.
That is Squawk Pod for today as we start another week. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern to get the smartest takes and analysis from our TV show right into your ears. Please follow Squawk Pod wherever you get your podcasts. That's it. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.